How does the half-year convention work? Have you ever wondered how businesses calculate depreciation for their assets? One method that simplifies this process is the half-year convention. Let's break down how it works in a straightforward way. The half-year convention is a rule used in accounting and tax calculations. It applies to fixed assets, which are long-term items a business uses to generate income. Instead of claiming depreciation based on the actual purchase date, this convention assumes that any asset was acquired right in the middle of the year. So, if a company buys a piece of equipment, it treats that purchase as if it happened on July 1st of that year. This means that in the first year, the business can only claim half of the full year's depreciation expense. For example, if the asset's annual depreciation is $7,143, the company would only claim $3,571 in the first year. Now, what happens in the final year? The remaining half year of depreciation is recognized then. This means that the business will take the last half year's worth of depreciation when the asset is fully depreciated or disposed of. The main goal of the half-year convention is to simplify the calculation of depreciation. It prevents businesses from claiming a full year's worth of depreciation on assets purchased late in the year. This way, it keeps things fair and balanced for tax deductions. The half-year convention typically applies to most tangible depreciable property under the modified accelerated cost recovery system. However, it does not apply to certain types of real estate or assets that follow different conventions. If a business places more than 40% of its total depreciable property into service during the last quarter of the year, the mid-quarter convention takes precedence over the half-year convention. This method can work with various depreciation methods, including straight-line and double declining balance. To illustrate, let's say a company buys equipment for $50,000 with a useful life of 7 years. Under the half-year convention, the first year's depreciation would be calculated as if the equipment was in use for only half the year. Instead of depreciating $7,143 for the full year, the company records $3,571 in depreciation for the first year. The remaining depreciation is spread over the following years, with a final half-year depreciation in the last year. This approach standardizes depreciation timing by assuming assets are placed in service mid-year. It limits the depreciation deduction to half a year in both the first and last years. This method balances tax benefits over the asset's useful life while aligning with Internal Revenue Service regulations. Understanding the half-year convention can help businesses make informed decisions about their assets and tax strategies.